All right, what's up, Big Daddy?
Yeah, I hear you.
All right, I'll let you see me too. Let me throw some charts on here.
Yeah, I don't see your screen yet.
Yep, it's coming. It's a coming. Here we go. Gotcha. All right, should have it now. You can hear me.
Okay, good.
All right, what a morning. Some energy here. So, what do we got? We got VIX spiking up here on the daily 9 and the overnight, coming back down. We have some retracement here to the 4-hour 9, 4-hour 20 rejected, pushed it back up. So we are now in kind of a standing ground here in terms of teetering to decide whether or not the dump is over or not. I think not. Let me just show you a little bit about why. So we are about halfway between support and resistance right now. Both are strong, and as we know, typically when we test resistance like this, we are going to expect these back tests to hold on the initial and get another run through here. So I suspect we will probably see that again. We are slowing down though here on ES, so this is a typical sign of bottoming out. Could be a temporary bottom as we go. We have not tested anything major on ES today yet on the upside. So resistance has not provided any sort of boundary yet. We are still kind of free falling there and flattening. So we flattened out a little bit on that free fall. Looking at SPY, you can see the gap is clear. All tests and attempts to break out of the session to try to backtest have failed. Market is not strong enough right now. There's not enough interest yet, I should say, to complete that task. And so here we sit right off of halfway between the overnight sessions, lowering demise here. So what's below us? We've got weekly 9 all the way down here at the 750s. We got RTH 4-hour 50 at 756. Daily 20 here a little higher, 758. So lots of supports here at lower levels. The question is whether or not we're going to make it down there or not. Now you can see losing this level here, 767 opens that gap wide for us. So that could bring us right down to the daily 20 pretty quick. We've touched below, so we've definitely hit below that point 767.33 right here, which is slightly lower than the bottom wick here. So the question is now is whether that's going to hold or not. So dipping below that there, we're going to see if we get another crack at this today or in the overnight session. I suspect we will see lower. Bitcoin pushing back up, back into the 64.7, so almost back to 6,500 up here on the back test again. Holding somewhat strong. A lot of crypto news today. A lot of interest in the crypto market today. So pushing that stuff around is not unusual. But back test suspected for that 63 800 here, so I do suspect we'll get to that area there. Prior day close also important level for today too, but like I said, Bitcoin's a little too hot today in the news to be too worried about. So here we are on the trail for ES on the 1 minute here. A lot of static in here. Tries to develop a trend in here, lost it, took it back, and then pushing back down. So a little bit of a cascade on down. Got our low in here. The day is 77.13 so far. And then our push back up to VWAP. We were not able to conquer VWAP at all today. So that is expected in a low volume production day like this. We did have news earlier too, which I forgot to mention to you guys. Nothing crazy, but a couple of pieces worth talking about briefly. We had consumer, excuse me. Oh, that's tomorrow. We have CPI. Ooh, look at that. Today, why isn't it showing me today? We had some real estate stuff. Let me give you the whole thing here first. This week, give me that. Sorry, my filters, of course, all cleared. Um, and go. All right, so we had this morning building permits, which were higher, which is good. Building permit change was about 5% as versus last month was 2.6% down. So massive increase in construction. From that export pricing down 1.3%, so that's kind of a negative, expected at zero point 0.2. So we had lower prices leaving the country, which affects GDP and consumer confidence, as well as consumer pricing. The index at 8.2% versus 10.2, so a little bit lower on that side. And then housing starts, like I said, we're up at 1.23 million. Actually down for the month versus 1.35. So a little bit stalling on that part there. But we have big on permits. So permits were up, starts were down. So that's just creating a backlog that will surge through. And everything else looked okay. Industrial productions came out at 915, which is so a little later release, caused a little bit more fire there. Expected pricing for 0.3, we got 0.2, so a little bit down on that side too. Tomorrow, Wednesday, we are going to see FOMC minutes as discussed. So there's that for tomorrow. It's at 2 p.m. So the morning will be a little volatile. And the next piece of news for the week is going to be PMI on Friday. So that's going to be global manufacturing PMI. So a little bit more of some difficult stuff to challenge through there. Anyway, let's get back to what we got here. Oil been bouncing around all day between the low 80s and reached a peak of 85. 88 is again our target for the kind of explosive range of getting things looking like they're going to push into the 200s. Geopolitical news on the front has been slapping us around all day, and you can see we're just struggling to maintain any kind of upside here. Look at SPY on the daily chart. So yesterday, this did exactly what I said it would do. Coming into today, we found the center line here. We now actually opened below the center line here, or maybe my Crayola crayons are a little bit off and I need to tweak this a little bit, but yeah, you get the point. That's why it's here. And so continuing down lower will bring us towards the bottom here. Weekly 9 is here, and then we will rise from there. So this is the current trajectory right now. If we take this in daily and close the day above this, then that gives us a entry back into the top half of the daily channel. If we close below it, then it gives us entry into the lower half of the channel. It is that simple. That is why I draw these lines. So you guys should be able to poke at that and get it. Apologies for the pointers. I don't know what to say. They'll be done tomorrow. Tomorrow's will be good and accurate, and I have a foolproof process tomorrow. I can't trust Claude to do anything. So back to the manual drawing board it is. On the cues for the day, same scenario, different chart, different channel. We are inside the lower channel boundary here for the cues. So what we want to do here is we want to make sure we do not drop below that 717 number. If we drop below 717 and close the day in there, then we are headed towards the weekly 9 at 709. Not a far run, but it means more coming out of the cues. There's a trend line here that we could follow that we don't want to be a part of. And just let me show you kind of how this tops out too. So if we have our tops connected now, this is going to create a new barrier here. So what I want to do is clean this up for you guys. So let's get this out. And the only two lines I want you guys to focus on are that top line, this. Hold on. I'm better off doing it this way. Let me back out of here. Okay, get rid of this one. A little too much riffraff in here, so get this out, get this out, get that out. Got that line, that line's fine. That bottom line's fine. I don't need this, I don't need this. Okay, now you can see clearer. So bouncing off of this would be key to holding the position. I suspect we'd lose it. Daily 20 meeting the weekly 9 is my suspicion of where we end the week. And that will hopefully give us a push, but we'll have to get down into this range to see that. So that's roughly in the 711, 710 range right in there. So we'll see if we continue to move down. NVIDIA finally gave out on London low, hit the exit here. And bounced up. So we're on the bounce there back into the session. We want to see if we can close above 220 today. at least in this 4 hour candle here. No, actually for the day, in order to be able to hold support going into the and keep the daily 9 from moving any degrees further down. So we want to see if we can hold that there on this. No concerns here with Nvidia. It's just that this is going to be the big volatility play going into next week with earnings. So keep in mind that that's it on there. Soxel, all right, so projection was getting us to 119. We came down and bounced here off of where we are current week low for now. And level wise, we're looking at basically a static level here. So if you can take this kind of crowning here across and put it there. So this is the breakdown of the consolidation, the retest, the fail, the retest that succeeded, and then pushes the breakout out. So we take that line across. So this is kind of the consolidated area. Everything below here is bounce out of. So we take that line over and across. That is 122.12. So at 122.12, which is roughly right here, right where the tip is, that is the bounce zone. So if we lose that, we go to the monthly 9 and probably fly through it a little bit and then recover. Anything below this is buyable in any kind of longer term. So this is what I'm looking for, is to try to get into this stuff. Cash secure puts down here, leaps, any of that kind of stuff will start to make some sense. If we go lower than that, the good news is the lower isn't that far. We've got tons of support down here. I do not see us breaching that 86.21 at all. So we're good in that range. So that's what I'd like to do, and find our buy zone here. So if anybody's looking for an area to buy Soxel, it's going to be in this buy zone here. And we're going to be looking for the pop out of this for a 2 week run before we look at exiting. And I haven't picked our target yet for that exit, but only trying to source the bottom here. So the bottom, I think, is pretty well sourced in that. We also may get to that bottom and may sit for a second. So please do not buy anything that looks like a short-term contract for this. Here, because it is not going to be the scenario that we want. For those of you that missed the exit that I gave you guys before, apologies. I don't know how, but we were, I definitely called it way back here not at the top. I missed the top, and I told you guys there's a little bit more room in there, but not worth chasing before we get the plum, because this is what you don't want to be in the middle of or stuck in. Most everybody who all had contracts were stuck in at least 3 candles worth of this demise without being able to execute on any of it. So that's the rundown on Soxel. Give you guys some space on that one. Here it is on the daily chart. So this one's a lot cleaner and easier to understand. We basically have the channel here that we were escaping out of when I called the exit. We have the channel that we disrupted into. We bounced off the top of that channel and then we exited hard and immediately. Monthly 9 doesn't look that far away from here because it isn't. Pain point is this 91.64. I don't think we see it. D200, my nickname, the Widowmaker here, is going to be our ultimate support. So anything down here is also buyable. I don't think we get down that low to begin with. And you can see the D200, how that's been affected all the way through here. That has not been lost other than a little bit of wicking here. And on both accounts, a nice springboard. So that's what I want to make sure we hold. We will hold that in my estimation. I don't think we even get that low, but just wanted to point out that math for you guys. So the objective here is in this range, entries, looking for exits up higher than where we were this just yesterday. All right, Micron, same scenario, same exact thing. We lost the $1,000 area here. This actually is funny because we actually broke the trend at that level. Look at that, 99982. I bet you it's 1,000 somewhere if I really marked it. So that's where we lost the 4-hour 9 when that turned, and so that's turned down now at that $1,000 mark. That tells us that is our breakdown number to beat. So all green above 1,000. Now it's for real. Let's get down into supports here. We've got the 4-hour 50 daily 9. This is going to give us a support for MU in the short term. I don't know if that gives us a bounce out of here or not, but I do think that we will get support enough to trade off it, at least short term. And then the watch zone for this one is 844. 844 isn't that tough. So, where am I here? Yeah, we can. I mean, we've got 704 on the bottom, but this isn't going to fall that much more than that. So MU will kind of pick up its own pace a little bit, and we're probably looking at buying somewhere here between the D20 and D9 as we kind of clear out through the space. CRDO, interesting play today. I don't know if you guys got it. I got two legs of it. I bought here, just trying to feel out the bottom here, to be honest with you. I got out in here and then took the short back down. I exited that, and now I'm looking for this to turn. So what I'm looking for on this and the shorter time frame is right here. So as soon as we take out this 5-minute 20, that gives me a green light to start going, as long as I've got the 5-minute 9 in support. 5-minute 9 is not in support yet. It's negative, so I'm at risk. So my entry here is going to be slightly above here in this like 247 247.50 range to try to catch a call on a short-term day trade, and I'm going to ride that to the 30-minute 9 and probably exit because I don't want to get smacked down. If the 30-minute 9 lets me through, and I gotta evaluate that as well. If that lets me through, then we could go higher and we could get up all the way up to the daily 9 back test, which would be nice. So an overnight might work on this too. High risk though, please. High risk. Here we are on the daily trend line here. This is what I want to stay above. We obviously fell well below that on excuse me today. Daily 9 in support didn't do too much for us here. Daily 50 is kind of my bottom line for today. This can go, and probably if everything kind of turns, will go a little bit lower, but I think we get the bounce out of today. I think the little bit of shock today is healthy for the market to get prepared for the next leg of this, and that's what we're here for. So CoreWeave, major dump here, which is kind of what I was talking about, why I was thinking that we have this whole retracement area here to go. Support at the daily 200 isn't going to be super strong. Monthly 9 will be though, down here if we get to these levels. But what a bracket to come down and through. All that push gone because of fears of the Iranian issues as well as the chip issues going into NVIDIA earnings. AMD, your loss leader. This is what I had also said yesterday, that AMD will take the first run at it. Lost the trend line here this morning, opened up and then lost the daily 9. So that is no longer in support. That is resistance and pointed down. So we'll have a little bit of a battle to get above this. I want to give you guys a short play on this, but I'm not going to unless you ask, because it could be a little bit rough. There's some key levels here that we got to be careful for, and I think only one or two you play them, and I don't think the one or two that would short this are on this call. So, but if you do want a short call here, we've got to run potentially to the 463, which would give us quite a run here on a target. But I don't think I'd play this overnight just yet. If you look at AMD on the full day's run in a 5-minute candle, you can see we've kind of flattened out here at the 15-minute 9. So we're making decisions here. When that 20 comes down here, I think that's where we will try to break out towards it towards the end of the day here, and then we'll probably reject and lose. If that happens, then it's shortable. So just keep that in mind right here, where you see that interaction between the 15-minute 9 and the 15-minute 20. Tesla. All right. So Tesla's got two hats on today. Tried to climb out of this thing, was rejected. I think the market forced its hand. Daily 9 in support below, and obviously the 4-hour 20 RTH is what caught the bottom here. It's why I keep these on these 24-hour charts. Always nice to know where the RTH 4-hour candles are, because they always provide support and resistance for us, no matter what channel they're playing on. Just remember, the rest of the world is not caught up to these charting patterns, so they're still using these, and that's where the trades happen. So we need to keep our eye on that pulse for a little while longer, probably year or 2 or 3 longer. But anyway, it's just a number on the chart, so we always have it. Coming on this back test here, so we are pushing down below the 4-hour 9 right now on the RTH, and we have the 4-hour 9 on the 24-hour as well that we are below. Those two will act as resistance for us, and we need to capture those before going any higher. If we close above China high, we've got a good chance of opening up higher tomorrow. If we close below China high, then we have a good chance of doing the opposite and heading towards the daily 9 for another back test. You can see the 4-hour 50 here running as a support line, almost a straight one. So this is almost perfect in support. So that would be my area for additions if you're looking to get into Tesla here, is any bounces off the 4-hour 50. We had one earlier today. We could potentially get one in a day or two if you look at this, the way we've been bouncing off those systems before. Here's our trend line too. If I take that line that we have here without the 4-hour 50, just watch this. So we extend this up. So there we go. So you see we're grabbing this point and this point here, pushing on through. It's done the same thing too. So all sorts of support here showing the bottom here for Tesla. Losing this is a high dump, speed dump, and we need to be careful of that. Levels give us support down in the 317 range here if we do lose that quickly. SpaceX, not dying yet. Still consolidating. I'll keep my fingers crossed. We'll get back to that one. Apple on the run, so this is good. I know a couple of you have positions in here, been holding through. So this run negates the breakdown once it exceeds 312. We're at 310 now. We're right on the cusp of that. We made an attempt earlier today. It was rejected, but the good news is that we built up support and curled on the 4-hour 9 and the 4-hour 20 for the 24-hour period. 4-hour 9 RTH is below us as well as the 20 right there hidden behind this candle here. So this actually looks like we've got some supportive measures here. My biggest concern for anybody holding short-term contracts in Apple, or even long-term for that matter, is twofold. One, it's still a long ways to get $2 to break this trend here, and that's only with price. That's not with trend. So trend is going to be a day or so, or actually a day or 5 behind us on actually recapturing this. And so that's just price action. So you got to be careful there. There will be retests coming back down here. So I don't know if you can survive those or not there. 4-hour 50 coming in as well, and this will turn to, actually it's already turned 2 degrees higher because we're on the 24-hour chart. But that's first fold. Second fold is that we have kind of a major pullback in the market, and the market on its own in a downtrend could get people to seek shelter and worry about their positioning in Apple. Apple has no problem going against the grain. Don't get me wrong. It's just I don't like to see market pullbacks result in people carrying positions on lone runners unless we think they're really going to break out, which in this case, we have a long road to go for Apple to break back out. So this consolidation is good. It's worth maybe repositioning, giving yourself more time. In the long run, I think this works out well, but any short-term contracts is probably worth rolling them into something a little bit longer. I know somebody on the call wanted this analysis. If you have any other questions about this, please post it up and let me know. But yeah, we're at that point where you'd want to kind of try to make some longer-term decisions on this. Especially if you're like full ported, you might want to at least cut it in half or do something like that so you can get on a rational level with yourself so you don't have to worry about this thing kind of stretching out too far as theta decays. Amazon on the support pushed back down. We definitely rejected again. So the concerns here are if you're shorting this and you took that on a short, you just want to make sure we don't close anything above this 4-hour 9 right here. So anything below that, continues to ride you on down. Look at the window though, really tight on the overnight session, as is with everything this past week. This past evening. So on the low end, we got support at the 20 here for the daily 20, which was strong. That pushed us up pretty high, but the 4-hour 9 rejected it entirely too. Across 2 candles, we've tested it twice now. Expect one more before potentially pushing a dump even lower. Netflix, look at that run. Well, it held the support here, pushed on up. It's now rejected the midline of the channel. and we are in that rejection process right now. So really clear trade. Hope that was something of interest to you guys. It's a nice little trade right there, but a short one, albeit. Google chasing it down, 409 in resistance level, 420, 409, 24-hour in resistance as well. This is Amazon with a little bit higher trajectory rate. So again, it's a complete repeat of what Amazon did here. We just need to stay below to stay short. To go long, we need to get above, and we need everything to turn. Going long for Google means clearing at first the daily 9, and that's going to be messy. So you don't want to necessarily enter in down here to take that whole ride with contracts. With shares, you're starting to get to a point where you can look at this thing from all sorts of perspectives. So just scrolling back, you can see kind of floorboards on this are all the way down in that 314 range. We're not getting that low. So probably looking at daily 200 here, 330-ish are good targets, but scaling is never a bad opportunity to just add a little bit here and there as you go. Contracts are tougher to play. Meta, this was the dump. This is the short. Great call this morning on this one. Went just as planned here on down. Now we got to look for the bottom in the recovery. Profits should be taken, of course, with contracts. This is a lot of a mess all at once here to manage. And if we look left, you can see that our ultimate support is 517. We aren't that far away from it, but I do believe what you're going to find is this level that we're at right now is going to start to act as support. So please be cautious here. This is where I think that we could probably find some voice. So if you're looking for scaling for Meta, this would be a good area to start looking at that. Let's see where we close. If we close in range here, but this is shares as well. I don't necessarily want to get contracts in here on any kind of overnight slips or geopolitical drama that might push us in the wrong direction quickly. That's it. It is it. So here we are, new candle. Opened up lower than the prior on SPY, and we're still kind of staticky here. So sitting in the middle of VIX, everything's pinned. Pinned in the center between support and resistance, pinned at the bottom underneath there, waiting for resistance to arrive. This is interesting. So we consolidate at a lower level. We wait for resistance to arrive, and then we attack that resistance to try to turn it and flip it to support. So we're waiting for it down. Waiting for the downside means potentially getting a bigger downside push. When we don't rush up to meet it and fight it, it's a weak market. It's volume, and that's just today. That's not in general total. And here we are on ES, just showing you the same story, just a little bit better graphic because you can see the formation on the 1 minute and how this kind of flops down. London low still an important number. That'd probably be a good bounce spot from if we continue to pile down. PDC is prior to close is right up here, so we're not too far away from everything else here. Yeah, we got a lot of consolidating going on here. A lot of thinking and concern for NVIDIA. All right, questions? Anybody got anything for me? Want to go through anything?
Looking for these entries over the next week or so, if we're doing contracts,
Yep.
would you say that like an October expiration is okay for swings for chips, or
So
what do you think?
I wrote out a response to your question, a different question that you had asked earlier, and I was looking at November contracts, which I kind of liked. My target is for you probably to sell these all in a week and a half, whatever you're buying now anyway, because we're going to get another one of these things here again. It's just going to be a quick run up. But I wanted you to get in, as close to the bottom, so scaling it. We will be higher than here. So anywhere you buy from here out. So the safety of buying November versus October probably isn't really that important. So I'm okay with October if that's your preference. You'll make more money, obviously, with the October ones versus the November ones. And yes, October gives us September, and I'm assuming late October gives us September. So that's about 2 months. 60 days is a really good rule for these high risk swings right here. And then we'll just watch the bottom, not all at once, red eye. Don't buy them all right now.
Gotcha. Not buying any yet. I was waiting for at least the monthly.
Yeah, I
trying to
always
be
feel
more
it. I see. I have the problem too. That the same problem you guys have, probably worse because I just don't have time. So I see how close we are, so I'll just start scaling. I don't care if I have to average down a little bit down here, and the D200 doesn't bother me. But I don't set alerts because I'm on it, and I don't need alerts pinging me at all hours that I'm not looking at this stuff because I'm already doing it. So I just kind of just take the extra risk in there. Um, yeah, and Botsy, good for you on the cash secured put side for Soxel. That's definitely a good play too here. Gives you plenty of time to make some money on them.
You're thinking this dip that we're looking at right now for our buying opportunity lasts like a week or so, maybe?
So the volatility will, right? So we're going to have this volatility all the way up and through and including Nvidia earnings, and then we're going to choose a direction. The volatility means we're going to go up and down, right? So you're going to have a lot of false runs that are going to be negated by pullbacks. Are we at the lowest point in this run? Let's do something we used to do in the past. If I had to guess, I would say we're probably here. Okay. So that means that, we're down here. We think we're at kind of the low. We're going to pop back up a little bit, and then we're going to come down a little bit lower. And that lower is probably going to be in this range right here, 370, right in there. No lower than the D200. D200 is going to hold. On any day, I think we hold the D200, at least with the spring back in there. And then we're going to start to pump up like that. So we'll pump back up. I think we exceed where we were. We pump back up into this area. D50 looks good, 177. I still want to hit those 200 targets, but I'm not going to call them out again because we've got this run here. But we may get up to that range. And then we need to get out. And we need to get out because we're going to come back down into this range again, probably harder and faster. And then we'll bounce off this again, and then we'll have a slow consolidation period through the midterm elections, all that kind of crap. And then once that stuff kind of fizzles out a little bit, we'll get a nice run up and start to actually start to be normal again, and where we can just buy stuff and go to sleep.
Sounds great.
That's
So
the long plan.
I like it. So this next little pullback that you're looking at timing wise, is it some certain events that are happening in a couple weeks
It's on
or
the charts.
September?
I have it's on the charts. I haven't looked to see what the geopolitical piece is going to be. It is not midterms though. So we're really looking at the end of the August close. I have a feeling it'll tie in with something stupid geopolitical, just because that's the way everything happens. But basically, the formation that we're in is identical to another formation, which gives us this push back up. It's kind of a falsifier. We get up in this range, and then we have a sharp pullback. And that pullback kind of eats into the monthly 9 here, which is why I've been telling you guys not to trust the daily 9 or necessarily the monthly 9 on Soxel. But today, I think the monthly 9 works for us. We sliced through the daily 9 already. That was the real piece of advice, not advice because I don't give advice, but real piece of information I want everybody to know about. And I think, what did you sell back in here when we first called it to get?
I think I got out to be cautious, and we had a little pullback to the 130s. I sold some there, then the rest. That was before last week, before the meeting or announcement or something. And then the
Okay.
rest like 150-ish.
Okay. All right. Okay. So you got a good average. That's good. Yeah. I missed this candle, and I told you guys I would. I knew there'd be a run, somewhere that would break out and that I wouldn't be able to get. So I think I missed the break of this line into the structure entirely. I think I told everybody basically to exit on this structure here just to be cautious, because who wants to stay in here to try to capture that when this is right there? You know what I mean? so
That was some sage advice. It was much appreciated.
All right, good. All right, so the next piece is that, yes, we want to buy dips. We want to start looking at entries. Your next, if you miss this run for some reason and it cuts up here, don't panic, because we'll be back in this range again one more time before we ride it on out. So it's not a end of the sunshine. But yeah, I'm going to start putting in right in around here. Going to start adding a little bit, and I'm going to sell some puts down here too. I'm going to kind of do the whole full Monty of option degeneracy so I can get it all in place.
Nice.
But yeah,
sounds good.
Yep. So don't be surprised though. There are two outcomes for tomorrow. Is that we open below the monthly 9 here and consolidate here at the 370 for the bounce out, or we open above the channel line here and slightly above the D20, but rejecting off the daily 9. Those are the two options. They're wide range, which is why to me it doesn't matter, because once they reconcile, they all reconcile down here and they all push up higher than both these levels. It's just a matter of your contracts. If you're buying, 5-day contracts, then you're going to shit your pants tomorrow no matter what happens. And if you buy a couple, 2 months out, like you were just talking about, then it won't matter. You'll be fine either way.
Yeah. So either way, it sounds like we're still probably going to have buying opportunities tomorrow if we decide to sit out today.
I think so. Tomorrow and or Thursday, and then potentially again on just a complete freak show candle on Tuesday next week. But that one doesn't count. I don't want to talk too much about that one. That one doesn't really count for anything. That'll just be like oh God, what happened? And then, it's gone. Okay.
Sounds good.
All right.
All right. Thanks, man.
You got
Good
it.
stuff.
Of course. Anybody else? Going once, going twice. Gonna send this thing to the record books for publishing. All right, guys. Thank you. I will see you guys on the trading floor. Toss your questions on the trading floor for me too, guys. I am always have an eye on that while I am fighting the bots and trying to get our information back up. We will have full pointers and everything else tomorrow. Apologies for today. There's nothing I can do. Everything got ripped up. Anyway, see you there.